Hello and good morning, everyone. Welcome once again to uh, morning market review where we make money daily. My name is Vic. So, and I'm going to be your host for this morning. We just have a few questions on phone at the moment. So I'd like us to just exercise a little bit more. All right, thank you for your patience thus far. I think we can't wait for everybody, so I will just have to kick off the review right about now, right? So please, if you can hear me, I would like to uh, get your response. If you can hear me, just let me know. Either yes. Oh, good morning, Moji. How are you doing today? Oh, okay. Thank you. Loud and clear. All right. Thank you. All right. So I guess we're good. So we can start off the review right about now. So, Musliuddin Abdulatif, thank you. Good morning to you too. Mr. Chinedu, it's been a while. Good morning. All right. So, I would like to start with our fundamental analysis. And, so briefly, it's just good morning, Jonathan. Morning. It's just very simple this morning. So the major fundamentals we have. And meanwhile, why do we pay attention to these fundamentals? Like, why do we need to focus on things like this? It's basically because it's one of the major factors that moves price, either up or down. Price, in summary, moves based on demand and supply. The guiding principle behind the movement in price at every point in time is based on demand and supply. And a number of things can cause demand and supply. We can have it as either a constant or a variable. By variable, I mean all of these economic events, these political events, or this economic data that we usually look at from our forestfactory.com, investing.com, and the likes of all those other websites. So these don't occur every day, they occur once in a while. We call them variables. But things that occur every day, the constant demand and supply, based on the need for a particular currency, as well as the availability of that currency, determines if it's going to create either a demand pressure or a supply pressure. Hence, price will pull up or pull down, responding to all of those buys and sells. All right. So and this one is one of the major ways we also know where price will go to. So that's why we pay attention to our fundamentals first. So our fundamentals sometimes can override our technicals, especially when it's a red envelope event. What do I mean? Now, of all the fundamentals, if you look up here, you see the level of impact. The impact has been broken down to us here based on the color, right, of the envelope right here. So a yellow envelope here tells us it's a low impact expected. This news does not carry weight. While a brown envelope tells us it's a medium impact, right? This news carries some weight to an extent. But you see the red envelope events here, or data, these are high impact expected. These are the major market movers where price can pull one direction, right? So we are majorly focusing on the red envelopes event. And for today, the major events we are having are the core CPI, which is the consumer price index. This takes account of basically is an inflationary data. It reflects the level of inflation in an economy, especially the US. This is what we are focused on, the US. So why is this news very important? Is this data important? Is because inflation tells how viable an economy is at every point in time. And inflation for this one, they look at the goods and services, excluding food and energy, but every other thing. Goods and services, excluding food and energy. So they use us to measure if the prices are increasing or not increasing. All right. So now, but basically, it said here that actual greater than forecast is good for currency. So we need a, a greater figure right here. So anything above 0.3, 0.4, we can see an improvement. But mind you, if inflation is increasing, it's bad for the economy, which means that the interest rate is going to be increased, right? It's just so that the currency will be strengthened back again. When there's high inflation, it means that there's too much money pursuing fewer goods. Hence, prices can just be increased drastically, right, by the sellers. So in order to do that, what they need to do is to mop out money from the economy. And they use more of the fiscal policies to do that. Economically, fiscal policies are used to do that. So one of the ways is to increase interest rates by reducing the number of the possible amount of borrowing. Businesses borrow, individuals borrow, institutions borrow. So they reduce the level of borrowing by increasing the interest rate you pay back if at all you borrow. All right, so people do not want that. So hence, the amount of money circulating in the economy will be reduced because of the increase in interest rates. And once it is reduced, by effect or by default, there is a long run and a short run effect. The short run effect is the fact that the current uh, the current available money in the economy will be strengthened. That is, it will boost the economy. It's just like saying creating a level of scarcity, right? Reducing the amount of money in circulation. It is going to definitely increase the value of the current money in circulation right now, right? So that is what it means. Now, once that happens, in the long run, you find out that the currency will begin to strengthen again, right? It will have more value again, right? So, but if you look at the long run also, it reduces business activities to an extent, okay? So, but depend on what they want to achieve. Now, this particular data is going to set another course for the US dollar, at least for the next 1 month, till the next data comes out in January, okay? Because this is a monthly news. This is a monthly data that we receive from the US. So I really, really do hope you understand all I've said. And meanwhile, remember this video is being recorded live on YouTube, so you can also head over to YouTube at Rally Trade. YouTube, just channel is Rally Trade. So you would see this video again, go over it over and over to get a full understanding of what I'm saying. Then, and that is going to be happening by 2:30 p.m. Now, the most important of this one is the core CPI. So by 2:30 p.m., we're going to be experiencing the Bank of Canada rate statements, um, more like the okay, let's just put it like that. Now, it's not sad news, it's a statement as said here, right? So you have to be economically inclined in order to interpret whatever they are saying, all right, in money value. So overnight rate also. Now, this particular overnight rate, we need actual greater than forecast for currency to be good. So it's the interest rate at which major financial institutions borrow and lend overnight funds between themselves, right? So this, we need the figures to be higher for it to be good for the Canadian dollar. Then also by 4:30 p.m., the Bank of Canada press conference. So it's not also a data news, but this is one we are going to be watching out for. So expect some volatility later in the afternoon for the US dollar as well as the Canadian dollar. So anything we're going to be doing for now is based on technicals, and it will be preferable if it happens before 2:30 p.m. for the USD, before 3 what's the time there again for the Canadian dollar, before 3:45 p.m. and 4:30 p.m. right? So let's see what the market is saying technically. I really do hope you can see my chart. Can you see my charts? Everyone, can you see my charts? Please, I need your responses. If you can see my chart, please just type it. Let me know if you can see my charts. Okay. All right. Thank you so much, Mr. Chinedu, Mr. Mike. Thank you. All right. So let's start from the USD. Thank you, Munji. Thank you, Sliu Abdulatif. So, over the last few weeks, we've seen that the USD has not really been faring well against the Canadian dollar, right? It has not really been faring well against the Canadian dollar. And just when it started picking up strength, it lost that strength again. So let's see what has been happening before. You'll notice some massive downward movement over time before. So it's downward movement, very, very massive, you know. Now, after the downward movement, we started experiencing some upward push. Just want to show you what price has been doing. We started experiencing some upward push, from here, started pulling all the way to the upside. And all of a sudden, now we've been experiencing a downward move again. But it looks like we are having a market structure shift, which is price is looking at going back to the upside again. So there are just different simple strategies on how to follow price. Now, any time frame I'm using, whatever time frame you're using, preferably if you're a day trader, you can use your 4 hours, 1 hour, you can look for entries on the 15 minutes or so to say. But now let's look at price. So you notice that price was doing series of higher lows. So you see this higher high, and we have this higher low. Now, this is not the higher low. There is a difference between doing, you want to say something. All right, quickly, just unmute yourself and just quickly say what you want to say so we can move on. Yes, go ahead. Sorry, my internet went off. No audio. Yeah, I guess you can hear me back. My internet went off. Acollinus, do currency strength has anything to do with indices? Not all the time, but occasionally it does. Occasionally it does. Occasionally it does, actually. All right, so I guess you cannot hear me again. You cannot hear me, right? Are we good to go? Is there audio again? Is there audio now? So we can just quickly get back to business. Okay, yes, thank you. All right, so as I was saying, I said you look at the market structure. So basically, be looking at market structure and how to attack it. Now, say in a typical downtrend, we have occur a move to the downside, which is giving us a low. Then we have a retracement. Now, one of the mistakes people make, right? Sorry, we have to finish our currencies before we go to Manuel. So one of the mistakes people make is there's a difference between price pulling up to do a retracement and price just ranging or like this. This is not a retracement. This is a range. And in case price after doing this continues pulling to the downside, then the whole of this move from up here all the way down here is one move. I don't know if you get my point. It's one move, one same move from all the way here to all the way down here is just one move. But if you have something like this, price goes back up, retraces, that's retracement, then starts going down. Then we'll say this is a higher high, a higher low, right? Sorry, a higher low, a high. I'm so sorry about that. A high, a low, that's a lower high, another high, then another low, right? This is a higher low, this is a lower low, right? So, but if we have, like I said, if it's something like this, let me see. I don't have retracement. Instead, I have a price just ranging. Then it continues going to the downside. So we'll just say this is a high and then this is the low. I don't know if you get what I'm saying. So we'll not get it confused. So that's what I'm trying to analyze here. So this is not a retracement. This is a range. And it continues to this level. So this is the low now, right? I hope we do understand that. This is the low because from here, we now have price pulling up. So this is now the retracement. So we now have another high. We have a high, sorry. Okay, so my high now comes here because from price coming down, it broke this low. And now, yes, there's another argument that would be like, sorry, this should be another low then because we had retracement. Yes, but compared to this one, this is most significant. Why are my buttons not moving? Nothing is moving. I think something is wrong with my chart right now. I'm trying to pinpoint. Let me refresh my MT4. It's hanging. Wow. Okay, so this is another low here. This is a low, right? So we are looking at significant structure. So automatically, this one is out. This is the low. This is the high. We take this one move. This is the low, right? In context. Now, like I said, this is a range, not a pull-up. But in this case, there was a pull-up, isn't it? Yes, but what I'm saying is, compared to this pull-up, this one is more significant. Sorry, this one is more significant than this. So that's why we choose this as our low instead of this. All right. So you can also remember, you can head over to this video again to watch so I get the full understanding. I can assure you, if you understand this, it's really, really going to be helpful to your trading. So whatever happens between this high and this low. Now, if you notice, this high was taken out at this level. So whenever price is in a downtrend, we expect only the lows to be taken out. Like when we had this low here and this high, price came to take out this low to give us a new low, right? Good. So when we had this low, price came to take out the low to give us a new low. That's typical of a downtrend. But when you notice that instead of the lows to be taken out, price went all the way back up and took out the high, it is suggesting another market structure shift from a downside to the upside. So hence, price should start pulling up. And how do you know that? You see this last low that you have here, the last low before price broke above the previous high you had before should be protected. It means you don't expect price to come back all the way down here and take it out. Worst case, it comes back all the way down 100% to form a double bottom for us, giving us a support and pull back up again. But if this low is broken and goes back down, then our downtrend continues. If I'm in an upward trend, how do I then trade this guy? How do I maximize profit? What do I expect? Because now we had this high right here, and from our low, it gave us a high. Now, what I usually do for instrument like currencies, okay, I usually have something like my Fibonacci. So when I start having retracement, what I do is I apply my feet from swing low all the way to swing high. For my Fibonacci, just simply come to your insert. You simply come to your insert here. Then you pick your, insert. You come to your Fibonacci and you pick Fibonacci retracement. Right? Fibonacci retracement. So once you do that, you can apply it from whatever you want to the other end. Now, it's usually applied from swing low to swing high. Excuse me, I need to take this out. Fib is applied from swing low to swing high. Let me take this one out. Take this one out also. Okay, so from swing low to swing high. Now, including the wicks, the wick, the upper and the lower shadow, right? So I take all of them. Now, after doing this, I usually wait for price to retrace, and the retracement should come to anywhere below my 50%. Anywhere below my 50%. Now, I have a zero retracement, I have 23.6, I have 38.2. Let me increase the chart so you can see it. So I have my 0, I have my 23.6, I have 38.2, I have 50, I have 61.8, 78.6, and 100%. 100% means price came back all the way to do a full retracement back to where it started from. All right. Now, usually anywhere below 50% is good enough. So I usually target in between my 50 and 61.8. In between my 50 and 61.8. And once price can tap into this level, then I'll be looking out for buy trades, right? I'll be looking out for buy trades again. So you notice that the first time it didn't really get there. The first time it didn't really get there, then price pulled inside, then you could see a confirmation, price started going back up. Now I would have entered buy anywhere from this candle. Price bought, it didn't get to this high, came back inside, buy again, came back inside, buy, and finally went up. And guess what? It took out the last high that we had, confirming that we are still actively in an uptrend, right? So it took out the high at this point, giving me a new high. Now, once price gives me a new high, what happens is I will adjust my fib. I will adjust my fib to the new high. So right now, the new high is here. And obviously, I'm going to have a new low, isn't it? The new low, which is the low, the high, then this is my new low, right? So I pick it. Remember, we are capturing even the wicks, the lower wicks, right? So that's why I'll capture up onto this point here. So if you can identify these key levels from your swing highs to your swing low, it's going to be really, really helpful. This is a 1 hour time frame. And Mr. Arubi Emmanuel, I said when we are done with the currencies, then we move to gold. Please, thank you. Right. So now from swing low even to swing high. Now you notice what we did the last time is what we are going to repeat again. So what did we do? We were targeting in between our 50 and 61.8 Fibonacci retracement level. So hence, for me to keep trading this guy, for me to keep buying USD JPY, I need price to tap into it and do this. Okay. If I have price tapping into this one, then I have confirmation that I'm going to be buying this guy again. So to continue my bullish momentum. So I'm envisaging a continuous bullish momentum. But remember, for me to enter a buy, I need this guy to give me some significant retracement. Now, for the fact that price stopped at this level here, there's a lot of accumulation here. This is what we call your order flow. For some persons who are in some of the classes that I did, there's something called order flow. Order flow is if I'm in an upward trend, I should pay attention to the drop in price before a massive pull to the upside. So you could see these bearish candles, 1, 2, 3, 4, right? The whole of these bearish candles that came down before pulling up, we call it a drop-based rally pattern. So you see the whole of that drop, they can be very significant. Hence, if I capture all of them, right? Oh, sorry. If I capture all of this drop right here to the lowest one, then I extend it to the future. Now, there's a lot of accumulation here. Now, what happens is sometimes, not all the time, sometimes when price goes up massively, it can come back into this zone. The moment it taps into this my zone here, it has a very high chance of start pulling up. So which it did. It tapped into it. After pulling out, it just tapped into it, continues. Now, we are really, really experiencing a tap back into it, isn't it? Now, there's also something, I don't like to combine strategies. I have my order block right here inside my order flow. So there's a lot of confluence that comes into play that supports price continuously pulling up after some little retracements. Okay, so I have inside my order flow, I have my order block down here, as well as my Fibonacci retracement levels. Then, if I want to add another confluence, or for instance, let me take this out, I can decide that, let me take this one out. I can decide, okay, I want to apply just my moving average. So let me apply my moving averages, for instance. I prefer the 21 and 50. This is the 50, then let me do the 21. 21, and let's use like red. Okay, so you will notice also that price has tapped, is in between my 21 and 50 retracement moving averages, right? Remember that it still coincides with inside where my order flow is, just at the top of my order flow. Just at the top of my order flow, right? So what do you notice? Price is there. Meanwhile, this level right here. So if we have a break of moving average, this is where it's coming to. There's a lot of liquidity still lying down here also. So, but basically speaking, I'm waiting for price to give me some significant retracement for me to continue buying. In the long run, I envisage a bullish movement for the USD JPY, all right? Bullish movement for USD JPY. Let me take this out. Okay, so let's quickly look at also NZD USD. Now, NZD USD, what are we having? Up or down? What are we having? Now, just take take a moment. This is on a 1 hour time frame right now. Take a moment to look at your NZD USD. What are we having? An upward trend or a downward trend? What are we having? Upward trend or downward trend? Can anyone still hear me? Okay, downward. Only one person. Okay, only two persons are responding. Only two persons just responded. Please, I would, for your own benefit, I really need you to pay attention to all of these things I'm saying. I know a number of persons right here, you are actually sincerely struggling with your trade, like really struggling with your trades. Some other persons, you're just having losses here and there. You enter a trade, all of a sudden it starts going the opposite direction. You wonder, what's this? Or you make win today, you make another loss tomorrow. You make wins today, you make losses tomorrow. And most times your losses can be more than your wins, right? There are a lot of persons in different categories. Okay, so but I need you to pay attention. What I'm giving you right here are the secrets to this market. So if only you can pay attention, you really get this, right? You understand at Idris, you understand what I'm saying. So please, this is what is really going to help you. And as as my usual practice, I don't like to do the analysis by myself. I don't, it's not like I'm giving you a handout. I like you to understand the process so you can replicate what I'm trying to do, right? Aha. So now, thank you so much for your cooperation henceforth. Now moving forward, please just drop your whatever you want to say. You can just kindly drop it for me, and I'll respond to it or I'll react to it also. So yes, downtrend. Typically we are still having. So perhaps some persons might be confused from this level right here. Okay, we're having a smooth downward movement. Now notice that this level here, this was a high because at least it's not like really ranging. It pulled up a bit, right? Good. Then we have a low. Okay. Aha. So price did not take out this high. It did not. So we're still actively on the downward trend. Instead, price took out the low. Yeah, it took out the low to give us a new low. Let me put it this way. So we have a new low right here. Now, this guy, there was a gap up. So I wouldn't want it to count. So compared to this one, I prefer this one as my new low. Meanwhile, if it gives me a new low, obviously I have a new high because this was a move that came to break this low right here. So if I extend this guy also to the future, this was a false break, right? So you notice that it was almost suggesting a market structure shift to the upside, but it did not. Instead, this level needs to be protected. Like I said, this low needs to be protected. If it takes out this low, then we should continuously be on the downward trend. So guess what? Price just recently took out this low right here. Okay, so giving us our upward, a high now changed. Sorry, our high is now here. I will need to move this guy. So I have a new high, which is here. And my low now, I don't have it yet because it's still active. So you notice that here would have been my low, but instead of it to retrace, it only went. So this move is a continuous one. Meanwhile, it just broke below my low, right? So I'm expecting this guy to get to where it needs to get to. So if it gets there, whenever I start the retracement, then I'll apply my Fibonacci from swing high all the way to swing low, for instance, and I'll be targeting my in between my 50 and 61.8 retracement levels. Now, remember, for USDJPY, we are in an uptrend. That's why our FIB is from swing low to swing high. But When we have a downtrend like NZD USD, our fee will be applied from swing high all the way to swing low, right? Targeting price to get to this point for us to continue selling. So what are the likelihood of price getting to this point? There are also some other stuff I usually look at personally, you know. Now, remember that pattern I told you for price moving to the upside. For an uptrend, I pay attention to the slight move down before that massive move up, right? But for a downtrend, I pay attention to the move up before the move down. So which I have right here. All of this move up here, right? Good. Before this break to the downside. So potentially, price can get here and you might experience some reaction back to the downside. But ultimately, if you can get to this level here, then we can continue selling for NZD USD. So that is my take on NZD USD is that price should continually become bearish, but I need that retracement to give me a cue to entering my trade. One of my favorite also, GBP JPY. There's this guy. Let me quickly scan through. All right. Okay. So I have this one here, low. Price did not get to this level here for my retracement. So target this level right here. But now I have price pushed higher and I'm experiencing some retracement. So my high is extended to this level. So I am still waiting for price at this level right here. Okay, so I'm still waiting for price at this level. So if you open your chart, you do it on your mobile phone, you can do it on your laptop. Just apply your Fibonacci from the lowest, the recent low right here to this recent high. Why? Because this was my previous high and price just took out my high. All right, so it took it out, so giving me a new high. So this high is extended all the way here. I'm experiencing retracement right now, right? So just mark your anywhere below your 50% retracement level is good enough for you to continue buying this guy because it's now pushing to the upside, right? It's now pushing to the upside. I think I have some. So let me look at Euro USD last before we now move to other stuffs. Okay. Now, same thing for Euro USD. Now, this is a 1 hour time frame. What do we have here? Upward trend or downward trend? Okay, let's not waste time because time is not on our side. Let me just do the analysis quickly. Okay. Now, we need to follow it is a story, right? You need to follow price. Although we are having series of higher highs, but let's know. Let's confirm first. All right. Good. So from this level here, you have your high, right? Then I have my low, isn't it? Good. Now, what you notice, this was the retracement. Price broke my low here, but I wouldn't consider this as my new low because this is not really a retracement. Came all the way down. This is not really that much of a retracement also. But this one is better than this one, right? But this is not really a retracement. Remember, you need retracement, not just range. Okay, this is more like range. This is more like a little bit of range also. So it means that when price broke this level here, all of this move, this is not yet my low. Neither is this yet my low. This is now my low because I have a better move now, right? So I have a new low. Excuse me. If only you can pay attention because the market will try to dribble you as much as possible. Wow, my chart is hanging again. We'll quickly get to all of that. I know there have been significant movement in all of those instruments, indices, basically. So now I now have a new high, then a new low. Now notice that my range is very wide, like really wide, right? Really wide. If I extend this guy, it's like wide. Then same for this one here. Now, what now happened? So eventually, price continues its downward trend by breaking below my low, right, to give me a new low, isn't it? Good. Now, remember that this was my previous high here, isn't it? So now, the move that broke this my low, it started from here, all of these highs here. So my high is now shifted to this level right here, all right, any of this level right here. So my low also comes to this level. Remember, we are taking the wicks, not just the candle, all the way down to the wick. Now, it means this zone is very wide, like really wide, okay? So remember, if you keep extending, you'll notice that this zone is really wide, all the way to my low. So let me put it this way. It's wide all the way to my low, right? Good. So we are still in that downtrend. Price is not yet pulling up, it's just ranging inside of that, this low and the high, right? Now, how do we enter a continuous sell? So I apply my feed from a swing high all the way to my swing low, right? So I've been expecting price, well, price broke above it though, but you're expecting price from your in between 60 and 51.8 retracement level to do what? To sell, right? Unfortunately, when price got to those levels or that level, it ranged a bit, edged higher, sold a bit, came back, sold a bit. Now, pushed higher. Now, there's a problem. I'm expecting price to continuously hitting the low or taking out the low, but it's not doing that. Instead, price is just trying to even remain above my 50 and 61.8 retracement levels. Now, taking my level now as my new support, right? So, price is back inside that level. So, Euro USD right now is indecisive if it wants to be in an uptrend or downtrend. So how will I know it's an uptrend? Wherever it takes. If it takes out this my high, like give me a new high now, right? Good, then it's an uptrend now. Or if it comes all the way down back, takes out my low at this my 100%, breaks it, then we are now continuously on a downtrend. So it's indecisive right now. Meanwhile, price is at my point of interest again. Okay, so potentially it can pull up and potentially it can continuously going down because we are still in that downtrend. But in that downtrend, we have now been experiencing a range for a while, right? Right. So Euro USD is indecisive. Meanwhile, if you are buying this guy, make sure you have your stop loss below. And if you can break below this level here, then I'll continuously sell it back because it's still a downward trend. That is Euro USD. So let's quickly move to other instruments quickly. This is gold. Starting from my 1 hour time frame, you could see that gold has really been pushing up, right? Like really been pushing up smoothly. Um, I have both my trend lines. Doing, I allowed you the first time, you didn't say anything. Please, if there's something you want to say, please, we have limited time. I've unmuted you. Kindly go ahead and say what you want to say because I can see your hand up again. Please, you can unmute and any of you or ask your question as the case may be. Okay, looks like maybe it was a wrong one. Okay, so please,
Hello, sir.
alternatively, just
Please,
yes, please.
can you analyze US 100, please?
US 100. I'll get to it. I'll get to it.
God bless you. Thank you.
I'll get to it.
Thank you, sir.
Right. Thank you. Okay, so this guy has been pulling up smoothly. And if we look at what price has been doing from our daily time frame, you notice that for price to go up, it needs to come down first. So price open bullish, bearish now, and we said it most likely can continue on that bullish movement, surely hitting our upper trend line. So this, it just broke above these levels. It's trying to do a retest to continue pushing to the upside. Okay. So for us now, the major job is to look for entry points, isn't it? Is to look for entry points. Now, how do I find my entry points? I can find my entry points in a number of ways. The truth is, you see that Fibonacci that we did on currencies, it doesn't really work as much. It works best for currencies, like really better. But if you apply it to instruments like gold or indices, you might not find it that funny. Okay, so know you are trading, know what can work for it. Hence, what works for this guy, my trend line works for it, my key levels work for it, but most importantly, my supply demand also works for this guy. So remember what we talked about, a buy in an upward movement, upward trend, in an upward trend, I need a sell down before a buy up. A sell before a buy up. So what do I mean? You see this sell down here, these two bearish, mark them, pull them like this. This is a potential hotspot for a buy trade if price comes back all the way inside. That's one. Good. Also, there is a sell before a buy up. It's just one candle. I would have preferred if it's like two at least, or possibly more. Okay, but this is just one. Now, there are times it can also work for it. So I have this another one sell down before an upward movement, especially when it creates liquidity. So you notice that it just came back, tapped into this first one, this one above, and kept pushing back to the upside. So two things. I'm expecting gold to continuously be bullish. That's one. But remember, price can decide to come and take liquidity down before going to the upside. So in case price does that, I'm expecting price to pull down here again or here this time around before giving me that massive upward push. So gold is still very much bullish. Now, meanwhile, also remember that you have your CPI today. So your CPI can just override this analysis that we have right here, right? How can you become a trader? As it is to learn how to trade. All right, please, I'll drop my contact. Just reach out to me after this, so we can kick it off from there. Right? Good. So what else? US 100, right? Let me try this. So US 100. Okay. All right. So I think that we are now going to be experiencing some downward push from our indices, major indices. We are going to be having some downward push. Now notice where we're having our upward trend smoothly, upward trend smoothly. Let me see. Smoothly and smoothly like that. Let me use my 4-hour time frame to do this. Okay. We're having our push to the upside smoothly. So price has broken below this my trend line, which serves as my support. Now, this guy potentially can now serve as resistance, all right, to continuously fuel that movement all the way back to the downside. Now, remember what we talked about. So let me show you how this thing actually works so that you will know it works. Okay. So remember when we are when we are experiencing some downward push, or if you are potentially looking out for downward push, one of the ways you confirm is remember that before we had this sell, before we had this massive sell to the downside, my 1-hour time frame, we had this push to the upside, this bullish, right? So if I mark the whole of the range, the high point to the lowest point, and I put it this way, you will notice that price came back to retest it and continuously going lower and broke the low that it came to before. All right, good. Now, what do we now have? We now have another push to the downside. So I look out for the buy up to the upside first before that push to the downside. This time around, I have like a wide range. So it means that if price can potentially come into this spot, there's going to be some serious sell-off. All right? There's going to be some serious sell-off. Some serious sell-off. Right? So I'm expecting US 100 to continue being bearish. The only thing that can possibly change this analysis right now is our CPI. Like I said, CPI can override our analysis, right? Can automatically override our analysis. So that is for US 100. I expect price to continuously be bearish, at least for today or even more. Then US 2000. US 2000 like the same. If you notice that what we just said right here, before we had this, let's back test this guy. See, now notice all of these push to the upside before this massive sell to the downside, right? We mark all of them and extend it to the future. What do you notice? So the moment price came back and tapped into the zone, what do you see? You see another sell, right? Good. Now it came again, it mitigated it, and it came again inside the zone, continuous sell. Now the sell, I need that sell to break below this low, the low it created from that sell-off, right? Good. Now for the first time, it just broke below the low, confirming that this downward movement is still very much in play. So what do? I look for the latest massive sell to the downside, and before that sell to the downside, I look for the push up first, the slight push up before the sell to the downside. Okay. Now, but from this one, move to the downside because it's not a retracement, it's a range. What do you notice? After this push to the downside, range and continue, right? And eventually broke this level. So this push to the upside, this bullish candle push to the upside, extend to the future like this. See that when price came all the way down and tapped into it, we are seeing some further push to the downside, isn't it? Good. Now, I need this push to the downside to be exhausted one way or the other. How do I know? You see the low it created after pushing to this downside, this low right here. Right here. Let me take out this so that I will not confuse. Let me take this out. Okay. Good. So this low it created right here that bounced off my trend line, right? I need this low to be taken out. So price still has some room to push down, either coming here or worst case scenario is that before price can, if at all it goes back up, it's coming back into this my zone to push down and take out this low for the recent push down, all right, to take it out again. So once it does, I look for another buy up before the massive sell down, put it as a range, wait for price to tap into it. So that's how I keep selling this guy until price breaks either, if it breaks, for instance, if it breaks this one and goes to the upside, potentially, I'm not looking for sales again. I'm looking out for buys now. I don't know if you get my point. I'm looking out for buying opportunity. Perhaps price will hit my stop loss if I'm in that trade, which is fine. Then I start looking out for buys. I make up my loss and I start making my profit over time. Why? Because if price is moving to the downside, most likely it should go for a while, for a few days, a few weeks. And when price is pushing to the upside, it should also go for a while, a few days to a few weeks. So it means that if price sustain that momentum for a few days, I will make my loss, I will make my money back and make way more profit before price change direction again. So this is my US 2000, the same thing for D40. Now this is the same analysis basically for D40. I think this is my 1 hour time frame. Sometimes, not all the time, but sometimes you can achieve this same thing on your lower time frame. You can achieve the same thing on your lower time frame. Now, let's do a little bit of back test to see what we did. Now, I was looking for buys, right? For buys, I'm looking for the sell down before the massive buy up, which price came, tapped into it, and bought again, right? But the problem is it was not taking out the previous high that I created. I needed to go back there, get there, or even possibly take it out. It didn't do that. So suggesting that price wants to come down. Now, price took out this my low. Once it takes out my low, it's suggesting a sell, isn't it? Good. Now, look at it closely because you really need to pay attention. Look at it closely. Pay massive attention to this. Now, I have a significant move to the downside, isn't it? Now, before that significant move, you have a buy up. Now, this buy up is too massive, so this is not going to be considered. Now, this massive one that took out this my low. So I mark the buy up first before the sell down, which is this buy up all the way before the sell down, right? Good.